So, oh, it's just me and you alone in the room right now?
I believe all goods with us here
Okay.
too.
If he wants to ask questions first, he can go.
Hi, yeah, I have my video disabled because, if I'm listening, it looks goofy to just shake my head and all. So when I'm asking my question, then I turn my video on so that Randy can see my expression. So right now, yeah, if you want me to start, Randy, I can. I have a question.
Sure.
Okay, so here I come. Um, how come I don't see you, Randy? No, yeah, no, there you are. I
I'm
can
hard
see
to
you now.
miss. The big fat
Did you
guy
turn
on the
your
left.
Did you turn your camera off?
No.
Oh, okay, now I can see you. Anyway, so my question is, I put a trade this morning for my VYM ETF, and I sold a call for August 21st for 80. Strike price was $84, and I need to get to my task so I can use. How do I? How do I do that? Anyways, I'll do it without looking at it. So my question is, it's okay, August the 21st, so it's like 2 months out. That was a good price I was getting. It was like, I sold it for 77 cents, and already it has gone down to, if I have to buy it back, like 65 cents. My question is, if I'm way out there, how does the time decay work on that? It's like I'm 2 months out.
Well, the closer it gets, the more it'll start decaying. So,
Okay.
so for the next month and a half, it'll decay pretty slow. But that last half month, that's when you'll start seeing it decay.
Okay. So my next question is, say, right now if you have in front of you, like it was like $78 the ETF. Now if it goes for if it comes up to 80, like next week it is selling for 82, and I'm kind of getting nervous and I want to get out of the position. If I buy it back, would it be more expensive than 77 cents?
Yeah, it'll go up. If the stock goes up, your covered call is going to go up.
The cost, right?
Yeah.
The cost of the cover, right? And if it goes from 78 to 76, it will be cheaper then, would it?
You mean if the ETF goes down?
Yes, if the ETF goes down,
Yeah.
and I want to buy it back and kind of, harvest the premium, whatever the difference is, would it be cheaper then?
Yeah.
Okay.
Yeah. I mean, the price of your covered call option is going to go the same direction as the stock. If the stock goes down, the price of it will go down. If your ETF goes up, the covered call gets more expensive.
Right. So then basically that does not count. Then how does the time decay factor in? That's my confusion.
Well, the closer you get to the expiration date,
Yes.
the less chance that call is valuable. So it'll go to zero to the expiration date.
Mm-hmm.
So
So that means, okay, go ahead.
okay, so time decay only works when you're out of the money. When you're in the money, you're at the mercy of the market.
Right. Yes. So in other words, if the closer to the expiration date it is, then it being for me to what's the word, exercise with my ETF being called away would be less chance. Doesn't matter where the price of the ETF is. No, it does.
I didn't understand your question. Say it again.
Okay. Now, if I'm getting close to the expiration date and the ETF is still above my the cost of the strike price, below the strike price, it won't be called away from it, right?
Correct.
And so I just sit there, and I have plenty of time for it to go up and down, and what have you.
Yeah, that's why you buy them out, a little bit longer, because you can time it. Then you can wait for the
Okay, yeah.
optimum time, and just look for your
Test tube.
ETF to drop, and then buy it back on the cheap. The option.
Yes, right. That's right. Thanks for clarifying that, because that's where my confusion was, that I was not was confused about that. So yeah, that was my question. And so far, the premium is pretty good. I mean, I'm happy with it, and just would like to keep 100% of it. But if like 50%, I can keep it. That's fine too.
Yeah. Okay.
That's money.
Yeah.
That's money in my pocket.
Yeah. Just watch it, and whenever it's comfortable, just take it, because then you may want to, roll it, close it out, and then open another trade further in the future to get a higher premium, because over
Yeah.
time that premium is going to decay off.
Right.
Yep.
Yes. Thanks.
Hey.
That's it. Yeah. Thanks.
Hey, Thumper.
Now
welcome.
somebody else.
Hello.
Hi, Thumper. How are you?
Good, how are you?
Just fine. So whoever wants to go next can go ahead.
Well, I'm going to introduce Theta Trader to you guys. He is a follower of John. I don't know John's last name. Over at CPT Dashboard. And he's doing some pretty cool stuff. Y'all might want to check out his channel. What's your channel name, Theta Trader?
Theta Trader,
Okay.
just like that.
Yeah, if y'all go follow him and give him a sub, that would help us all. And I think you'll find a lot of good information over there.
All right, Randy. So my question for you is, because you're with IB and I'm currently with Weibo because I'm cheap. So I want to switch, but I'm giving Weibo a month because they said they're coming out with naked puts this month, right? But if they come out with naked puts and not the ability to roll them, then I'm gonna leave.
Well,
So
well, rolling them is just a matter of closing one and opening a new one.
yeah, it is. But when you do the automatic trade there, it doesn't. You don't really take the wash sale hit, even though it doesn't matter to me. But they should have that feature. We're in 2020, so
Yeah.
if they don't have it, I'm gonna leave. So like with IB, I see their margin is the next thing is IB's margin is a lot cheaper because it's like 6.5% I pay for margin, and IB's like 1.5.
Yeah, it's worth it there if you're using margin.
Huh?
It's worth it for that if you're
Yeah,
to switch.
because as you can see, like a lot of my covered calls, I sell them on stocks that I have on margin some of the time. So I have to do that. But back to the other side is so like with IB, how are they rolling and stuff? All that stuff is easily automated on the software and
Um, I don't know. I don't use those features. I manually close one and open the next one,
okay.
because when you roll them, you're kind of at the mercy of them for giving you the price, and I'll have to go sell one and buy one because then I can specifically set that price. I mean, I've tried it on TD Ameritrade, and it seems like my fills are horrible.
Yeah, the gap is like the spread is wider when you roll. I know the spread, so you have to work it a bunch of times to get.
Yeah, and if
into
like the
middle.
market's going down hard and I need to roll out, what I'll do, I'll sell the first one, and then I'll wait 30 minutes before I buy back in, so that 30 minutes can give you a nice little bump.
Okay.
But that's if you got time to sit there and watch it. If you're on the run and can't do that, then that may not be an option.
Next thing I have is, do they show you your margin requirement for a put before you sell it?
They do.
Like, can you pull that up now, or you can't see it after hours?
Um, I can show you a sample of how it works.
Yeah, yeah, that's
So, let me share the screen. Y'all seeing my interactive broker screen?
yep. I see it now.
Okay, so say I wanted to go and sell a Tesla put. I don't know if it'll actually pull this up, but so let's say I wanted to. Come on. Let's say I wanted to sell a 1160 put. So what it would do, that would populate it into my order entry, and then I go to this advanced tab, and if I hit margin performance, it shows me what my maintenance margin is right now, the change that it'll make, and what the margin will be after that. So that Tesla trade will only cost me 20K in margin.
Okay.
But I'm not going to do that because that puts me way up high. You know, I like to keep my margin down about half.
Yeah.
And so what you can do in their screen on this net lit, that's your liquidation amount, and there's your margin amount. I try to keep this around half, and it keeps it pretty safe.
Okay. I'll let somebody else go. And I'll wait till my turn.
We got an hour with it. It's all good. Just if you got more questions, just keep on going.
Okay, I don't want to bore you. So do you sell covered calls? I don't know if you're always talking about puts.
I sell puts for the most part. I only sell covered calls to get out of the trade.
Oh, okay. So you just lean more on the put side.
Yep. Well, the thing is, on the put side, it's easier to manage the trade. If the trade goes against you, you just roll it down. Because
Yeah.
when you roll it down, it's constantly be more profitable. When you're doing it like John does, when he has a stock and sells covered calls, when the stock goes down, you can't roll the covered call down. You just have to keep waiting on it. You know, the stock keeps going down, and I just like playing it from this direction.
Okay, I see what you mean.
I mean, it'll work both ways. His is a little more capital intensive because you have to actually own all that stock. If you remember my screen, I only own just about $40,000 in stock, and to do his, you got to have about $200,000 in stock.
Yeah, that's what leads for me to I have to use margin to make up the difference in my account.
Yeah, try it on the good side, and I think you'll find that you're saving a lot of money on that margin.
Yeah, I know the reason why I'm not doing it now is because I have to do cash secure because this broker's trash. So with cash secure, you only have so much leverage.
Oh, I understand. That's why I don't do TD Ameritrade because I can't work there. But set you up an account with Interactive Brokers, and you can go 4 times leverage. And the only difference is you got to pay about $20 for your quotes a month. That's about the only thing I don't like about them, but it's really worth it.
So the platform is free to the TWS?
Yep.
Okay, so you just pay for the quotes and
Yep.
that's it.
Yep. And if you get on
well,
there, let me know. I'll show you which quotes you need because it's a pain in the
yeah,
butt to try to figure it
yeah,
out.
I watched the video and I seen like there's 100 different things you can choose from.
Yeah, but yeah, if you did all that, you'd pay a fortune. But you only need just I'd have to go look, but you just need a few, and the main ones in a group, and it's about $20 a month.
Okay. One more thing.
Sure.
So say I'm set like for my account, right? I have 40,000 in my account,
Hmm.
and I go to IB and I want to sell puts. I can only sell margin $40,000 worth of puts, right?
Um, yeah, you could do like $160,000 worth of stuff. I got
No, I
a
know where to do a stop. I mean, like for the puts, is it? Am I limited to just my 40,000, or can I go over that in, as in puts that I can hold overnight?
yeah. I've got a $35,000 account that I'm managing for someone else, and I trade Tesla in it all the time. I'm afraid to do Amazon. I think that's too big, but Tesla's just fine.
Would sell it. So what I'm confused with is like a while ago I just saw you had when you pulled up that Tesla, right? And you said $20,000 was the margin for it, right?
Uh-huh.
So with my $40,000 account, would I be able to sell three of those?
Um, I think you'd be pushing pretty hard on that.
Yeah, no, I know I wouldn't obviously. I'm not gonna sell three of those. But I
Um,
just mean like
yeah, probably you could. Wouldn't recommend it, but yeah, I think you could.
yeah,
They,
I think I'm wording my question wrong. What I'm trying to say is, um, with your put margin, is it 2 to 1 for the amount of puts you can sell on margin,
no,
or
no.
just your
So,
cash balance?
so whatever the net lit on your account is,
Okay,
all
so
your
it'll be
all
forty
your
thousand
stock,
then.
all your cash, you can multiply that by 4 to find out what your maintenance, what your margin is, and then you only use. Um, well, I don't know how the calculations. You just get your internet broker account and just check it out every time you want to do it. But they're they are the most liberal broker out there for margin.
Okay.
And the cool thing is with the puts, whenever you only use that margin as a basis to sell, but unless you're actually assigned and take the stock, you don't pay margin.
Yeah, yeah, I know
Don't
you
pay
don't pay
interest.
for selling puts.
Yeah.
Okay, if I got any more questions, I'll chime in.
Okay. Your turn, Thumper.
It's good. I'm just here to listen and take it all in. Hey, didn't come with any questions. Okay.
Well, okay, it's going to get real boring if no one wants to speak up unless someone else comes in.
Oh, I'll keep talking.
Okay,
It
keep
sounds
going.
like Trader has a lot of good questions.
Yeah, if you guys don't want to talk, I'll keep talking. All right, so as you can see, Randy, that I play with a lot of stocks that are very volatile because um, I believe that if I'm holding a stock, I should get paid $100 a day. That is like partially what I look at.
Mm-hmm.
Um, so like this week, so like today I chose Beyond Meat over Boeing because Boeing seems to have good news one day, bad news the next day. Boeing just seems to be getting, and I didn't like that 180 range is kind of intimidating because that thing can plummet. So I chose Beyond Meat over that. What's your thoughts on? Obviously, I've seen you play with Tesla and Amazon. What's your thoughts on these highly volatile stocks?
Um, I'm no Jim Cramer. I don't have all that in the back of my head. I don't really know those stocks. Um, Beyond Meat, I would choose that over Boeing because I think it has a future where Boeing may take a whole lot longer to recover.
Yeah, that's
Um,
as I said, that's the thing that I play. Actually, I played Boeing for one day, and I came out of the trade today because it just looked weak. Because I bought the stock 183 yesterday and sold two 185s, paying me 320 a piece, so $600. And if the stock moves up, and the thing literally act like it wanted to go to 180, just fall before the contract expired today. So I was just like, you know what? I'm gonna take this money that I'm up and just run.
Nothing wrong with that at all.
Yep. And the bottom falls out of it the last 10 minutes. And that is one of the things that I've seen there is with these volatile stocks is like if I feel like the stock should not come back to that location, uh, I end up just taking a trade off, especially if I'm up. What do you think about that kind of mindset?
Um, I think if that fits your trading personality, that's great. Um, I'm looking for something a little more stable for myself because I'm a little bit older and, I don't have time to rebuild my account if I blow it up. So, um, but Tesla's
Yeah, it's pretty volatile.
pretty volatile too, but I'm making a ton of money on it. I'm making
Yeah,
two to 3 grand a week on Tesla. And I usually post out my trades in that little Discord when I do it, and everyone can follow along.
yeah, it's too out my range. But the reason why I have this mindset is because I'm on margin. So I can't have these crazy volatile moves that especially with a stock like Boeing. So I just walked away from it today.
Yeah, I mean, you just have to pick where your risk level is. I mean, something a little more stable that I trade all the time is Apple. So it's like 350 now. I'll throw out puts at about 300, and that's a good couple of $100 a week. I don't have to lose sleep over.
It's yeah. I'll look at it on the put side because as I said, the capital for the call. So by the end of this month, I think I'll probably just be transferring my account out of this broker if I can't sell puts.
Yeah, we got another guy from Sweden. He's getting into interactive broker, and we're getting him set up. And yeah, I mean, it's just a way to go. I mean, the best part of internet broker is their leverage, the 4 to 1. It just allows you to do a lot of things.
Do you sell puts during earnings time?
I don't even pay attention to earnings. I probably should. It'll probably bite me sometime, but I don't worry about it. I don't even look.
Hmm.
Because if the earnings come out bad and the trade goes wrong, I'll just roll it down until I can work my way out of it. Like last Thursday, we had that really bad day. Amazon turned against me,
Yeah.
and I had like a $20 put that turned into an $80 put where I was down, and in about a week and a half, I rolled it back to even. So it's kind of a never take a loss strategy.
Okay. That's another way to look at it. How long have you been using this strategy?
Um, well, I retired about 2 years ago, and about the first year I tried day trading, and then it took about 3 months to figure out options. So I've been doing this about 9 or 10 months now.
Okay.
So there's a whole lot I
What?
still don't know. I just found a strategy that worked, and I searched through probably hundreds of YouTube videos, and the ones that I kept consistently going to was the put strategy, and they were videos that had hardly no views, but that's where the gold mine was to do this stuff.
Okay. Um, for when you're selling your puts, um, how far out usually goes in for probability of out of the money? What's your percentage you look at?
Like 68%.
68.
Yep.
So what's your goal capture? As in, like, how would I say? Well, you're playing Tesla, so that's outside the range. Like, are you looking for, say we're doing a stock, let me see something that's at $100. Say like a stock that's at $100. Are you looking for $1 on that stock when you're selling a put?
Um, I'm looking at whatever
Or
68%
whatever
goes.
68 is? Okay, so you don't look at the,
Yeah, and that's why I've gone to the bigger stocks, just because I want bigger dollars. I mean, you could get the same 68% on Coke and get 24 cents. Or I do 68% on Tesla and I'm getting $15. So,
I have a question on that note.
sure.
60 is 68. Isn't that very close to your strike price? Are you comfortable with the in the put side of it when you're selling it that you might get
I am.
right?
I am. The reason so is I want that higher premium, and
Sure.
I'm willing to manage the trade. I don't care if it gets assigned, because then I'm going to turn around and flip it and start selling it with a call. People who go way out, you get no premium, and it's not worth the risk.
Yep. Right. Because I go, I haven't put that many trades, but I go basically like 75 or to 80, and I hardly get much in there. But I'm like so new at it, so I get nervous. So I just kind of stay. Once I'm comfortable, maybe then I can go 68.
Yeah, and if I'm looking at the charts and I think that the stock is really rising, I might even go right at the money, because I'm betting that in 7 to 10 days that stock's going to be above that, and I'm picking up the sweet premiums. But I'm also got an account size that I can absorb the stock if I need to.
Right. Gotcha.
So, yeah, it's really, wherever your comfort level is.
Yeah. Right now I'm at that point where, yeah, like I said, too early for me to go, take risks and just slowly build it up and then take it from there.
That's good. I would do just that until you're ready to move up. Because I started with Coke and AT&T, then I got on a Visa train for a few months, and then Visa kind of petered out, and then I jumped into MasterCard, just a little bit higher price stock, and then that one kind of slowed down. So then I jumped to, well, actually I went to Amazon first, and I was nervous with that, but it worked out. And then I found that Tesla pays better than Amazon, even though it's half the price. The premiums on Tesla are just killer.
So how do you see, like, the Bank of America, when I traded that one twice already. So sometimes you don't get good premium, sometimes you get, so you just have to, that's why I keep asking in the Discord, any good stock where it's giving good premium, where people are trading it.
I would stay away from the financials. The financials are in the toilet.
Okay.
They're going down. The premiums suck. I see no reasons to be messing with those, because you're messing with a 25-cent premium for 20 days. it's not worth my time to even look at them.
Oh, absolutely, yes. Well, you are big time now. I'm just kind of talking my level.
Even you guys with a $25,000 to $30,000 account, I don't know exactly where yours is, but you know, look at that AMD. It's on a run, or Verizon. It's a good solid company, or um, any of those like that. But those banks are just toilet right now. I think that when they do start coming up, they might do it, but it might take 3 to 5 years. Because,
Okay.
because until the Fed rate comes off of zero, there's no way for them to make money.
Yeah,
And that's
because
just my opinion. You know, um, some people, they want to be into those at a very cheap price and wait for them. I just don't have the time to wait.
right. Yes, that makes sense. See, like AMD right now, it's 67, 64 is giving pretty good price, like between, it's like 88 cents. Then I go 74, I'm still getting pretty good price on that, but it's too close for me, too close for the strike price, and the stock price is too close for me to be comfortable.
Then look at the Verizon. It's going to be a lot more.
Okay.
The premium's going to be a whole lot less, but it's not going to be nearly as volatile. AMD is volatile now because it's been running up.
Yeah. Okay. Right.
Hey Randy, so you just put on your puts. You just do weeklies. You don't do 2 weeks or 3 weeks.
I usually try for 7 to 10 days.
Okay.
I'll usually around two, but somewhere between Tuesday and Thursday, I'll sell the puts for the following Friday.
Is it between Tuesday and Thursday?
Yeah, somewhere in there. Just because generally by Tuesday and Thursday, the puts that I had out have decayed to the point that I want to replace them, and so I replace them for another 10 days.
So how much do you look for? Like 70% of the profits or 50?
Um, yeah, I'm real flexible. Um, like my Tesla puts, you know, I'll sell them for $15 and sell them at $3 or $4, buy them back at $3 or $4. My Amazon ones, I sell for like $20 and buy them back around $4. And that's every week.
Let me look at. I'm pulling up my Amazon right now.
Sure.
So you usually go 100 or 150 out.
Yeah, usually about 100. Hang on, let me share my screen. I'll show you what I got here. You seeing my screen?
Yep.
Okay, so here's one. Actually, I just where did it go? So, oh come on! Oh, they're all rolled off. But I sold this one at nine. Oh, that's the Tesla one. No, they're not. They already rolled off. So yeah, I bought it like the Amazon one back here at $375. I probably had $15 or $20 in it. Here's this Amazon one here. I sold it at 26. It's at 465. I'll probably buy it back Monday and sell it again. Here's the Amazon. I did it today because I couldn't get a sell on this one, but I lowered it to 26.40. Sold it for 8.13, and today it dropped to 7. So when it gets down to 2 or 3, I'll swap that one out. Tesla, I did this one today, 975 down to 750. So yeah, I kind of got out of Tesla because I thought I was going to stop going up, but that thing's a rocket today.
Yeah, it just ran off.
So, do you do limit price or do you go market?
I don't go market, but IB has a thing called mid, so I did the mid price of the bid and ask, and it usually fills within a few seconds.
You never market, you will get clapped.
Yeah,
Never. Because some of these spreads are so nasty, and once your market order goes in, they're just laughing and they'll hand it to you.
yeah,
So, if for me, like sometimes when I'm filling my orders, it'll take me like 3 or 4 minutes trying to get a fill. Just send it in and it doesn't pick up, send it in again, and that will save you even $1.
yeah,
Because sometimes the spread is like $1 wide, and you could get it for 20 cents if you just keep, just typing. Literally, it'll take you like 1 minute to send 3 orders in, and you get it for 20 cents. But if you push market, they're selling it to you for $1.
Ah, gotcha.
Never market, never.
yeah. You'll do it once or twice and learn.
Yeah, trust me, you get clapped. Like you'll see some of them where it's like the sell price is $5, and the person is willing to buy for $1 for like $1, and the other one is 5. And if you push market, you just sold your option for $1 when you could have probably gotten $4 or 4.50 for it.
Well, you are running some pretty volatile ones if you're getting those kind of spreads.
No, no, I'm just saying I've seen it. I've
Yeah,
seen it in the thing. I don't mess with it because I just look at option chain just to look to see, like if a stock is got bad news, I actually go to that stock to look to see how it operates with
yeah.
the computer, how the computer increases value so fast, and how the computer acts.
Oh, okay. Yeah, I was doing market. It was just getting filled right away, but it did not know that I'm just starting out. So I might have been, taken that way, but it was like few cents. The spread was not a whole lot, but still it is. So now I know what to do. So
Yeah, never get in a rush on this stuff.
yes, yeah. Right now I'm just learning, so it's really not for the money. It's like a few dollars here and there. It's okay, but I need to keep asking, like uh, uh, he asked such a Theta Trader, right? He asked a question, yeah, and that's how we learned that I'm listening in on what your experience is, and I learned something new.
Yep. One more thing that will help you a lot is this is what I do when I want to sell something. I
Yes.
look at last price. Right? Granted, it could be very old, but let's say if the option is the bid is like today on Beyond Meat, the bid was at $4, and
Uh-huh.
the ask was at 5.50, right?
Yes.
And
Yeah.
the last one was sold for $5. So I know somebody's willing to pay $5 for this. So I went in with a 5.30. I didn't get fill. I went in with a 5.25. No, I went in with 5.20, and somebody bought it for 5.20.
Yeah,
If I would market, it would have sold for $4.
that's what I do. I move it in a nickel increment.
Yep,
Oh, okay.
that is literally how I did it. So you have to work for your money,
And then
basically.
and then sometimes you just walk away. I was trying to buy that an Amazon put today, and I couldn't get it filled for what I wanted to buy it back for. So I just walked away because I know that over this long weekend it's going to deteriorate, and they're gonna sell it to me at my price.
Ah, okay.
I
So
just,
usually you don't go for the bid price, but you go for the ask price, which is much higher.
Yep, you go for the ask price and you work yourself down. So, or if you want to just sit there until you get a fill. if you
Okay.
think it's gonna fail, but if
And it
you
also
don't,
depends on how close your bid ask is, because like on Apple, your bid ask will only be a nickel apart. On those, I'll just take whatever, and
Okay.
it'll fill almost immediately. But some others like Amazon, it's $5 apart on the spread.
yeah, yep, and
Uh-huh.
that's money right there. You're throwing away, so you have to look at it.
Yep.
So in other words, if you like I was watching videos, they said if you go for the ask price, you never get filled. You have to go with the bid. So,
Yes
but you
and
all
no.
are saying, hmm?
That's a yes and no.
Oh, okay.
If the stock is moving up, then you get filled at the ask price. You understand what I'm saying? But if the stock is barely moving, like creeping, sitting, then you won't
Yes.
get filled. But if you have certain times, like if you're trying to get filled in the first 15 minutes of the day and the stock is moving up, somebody will mark it in and get filled. People still mark it in and you get filled. So it is a
Oh, okay.
possibility.
So what is the best time, do you all think, to really put on a trade? Early in the morning, or at the closing bell, close to the closing bell? Or it depends. How do you all say that?
Are you asking me?
Yeah, you are Theta Trader, whoever.
Um, I do it whenever I can. I don't really care about the time of the day.
Okay.
Uh, for me, it's a little bit different. I am greedy at the same time, and I'm growing my account, so I take a lot of risks, but at the same time, I am using margin, so I'm using money that is not mine. So
Yes.
I want the premium. So what I look at is, as he does 7 to 10 days, I will do Thursday or Friday, so 7 days basically, yeah, around there. So I will put it on. I want the stock to be going up. So the calls, because I still cover calls, and even for the puts, if for some reason I want the stock to be going the direction of what I'm selling, so I get that IV value for the option.
Right.
So in the I like to put mines on in the morning, or if the stock is trending in one direction for a while. So it all depends on one of those two. That's usually it. But I like in the mornings.
So, do you use charts also, like Randy does?
Yeah. I do. I look at charts and everything. I have like already researched like the stock and how it's trading and everything. How I want it. I just want to see it. Um, I just want to see it. For me, the stock has to have recent good news that is valid, that makes sense. And I reviewed the chart and I said the stock is in an upward trend. So I'm okay with it, and I have a risk level to risk up to risk off. Once I have those things, then I am willing to take it if that day is not a sell off day.
Oh, okay. So, what is your news source? Where do you go to?
So for me, I use I look at Yahoo Finance, and I get some stuff in Weibo, but it's usually delayed by like 2 hours maybe. But like if I'm gonna buy the stock and sell a call on it, I want to look to see what's out there that day. I will go through Yahoo Finance and see if there's anything out that day, or if news came out the day before. But most of the time, they put out their news um, in the early morning and all that stuff, so you're able to get it right before 9, 10 o'clock.
Yes. And Randy, how do you do it?
I pretty much ignore the news.
Okay.
For him, it's a lot different for what because I sell covered calls, so for him, it's a lot different because I have to hold the stock. So I don't want to have a stock that has bad news because it's gonna fall through the ground. Like I have one stock that I'm down on right now, Win,
Yep.
and they shut down everything right now, so I'm down on this stock until it comes back up. I can't even sell anything on it because way below my strike price.
Okay.
Yeah, I
So
mean, last, blah, blah, I can't talk. Last week, Facebook, took that big dump, and I wasn't watching the news, so it caught me off guard, and it happens sometimes. But that's just the way I roll with it, and so you just take the consequences.
well, you saw Facebook recover this week. Hmm. That thing that thing was a dragon.
Yep, I was already out of it by then.
And one more thing that I learned, like with my experience with Roku did me dirty last month, is as long as a good company is gonna come back.
Yep.
So that is one of them.
Well,
Roku that literally was about to go to 95 on me, and I'm like, man, I'm gonna take off a trade at 95. I already had my mindset. The next day, Roku gapped up $10 in pre-market and running, and I'm like, what is this?
yeah, that's my number one strategy is only do this with stocks that you're comfortable holding. You know, because yeah, the good stocks, if you give them enough time, they will come back.
Yeah, I see that one a lot. How much volume do you look for on? Do you look at your volume when you're selling your
I
puts?
don't because I'm only trading companies with huge volume.
Okay, I see what you're saying.
Apple, Tesla, Visa, Mastercard. Uh, those are my main go-tos. So I know the volume's always there.
What's Mastercard ticker, if you
M
don't
A
mind? Huh?
M A. It's about a $350 stock.
I just want to add it to my list,
Yep.
uh, to my watch list.
And Netflix, that's another one I trade pretty regular.
Outside my budget.
Well, once you get on an internet broker, it'll be well within your budget.
Yeah, yeah. Selling puts, but selling calls it's outside my budget.
Oh
But
yeah,
selling puts it would be
yeah.
in my budget, so it's a little different on the other side.
Well, we'll give the puts a try. I think you'll find it works a lot better.
Yeah. It does the main thing of the rolling. Because I was doing cash secure because I tried it on a couple stocks and I've never even gotten assigned. It's just cash secured. You can't even leverage yourself
Yeah,
because
yeah, I know that. But once you change brokers, internet broker, you can leverage the heck out of it.
yeah, yeah. That's the thing because I was looking at selling some puts, and when I want to sell, 4 or 5 of these, I can't because I have to pull up the full cash for 4 of them.
Yep.
I'm the same way in E-Trade. 100% requirement for collateral.
No, you have to get approved for naked puts on margin. The problem I have with Webull is they don't have it. Period. E-Trade and all the other brokers have it.
So I just gotta update or go for a higher level.
Yep, you just got to go for a higher level. Like I have it with Thinkorswim, but I didn't want to go to Thinkorswim because they're charging $8 for margin, and not $8, 8% for margin, and no, that's just a big no. Like I'm already at 650. I'm not going to 8. Well, one of the things, just like we're on it, and you said about getting the next level, make sure you understand what you're filling out when you fill that out because you're selling puts. So make sure you fully understand that how it works and everything.
You're talking for the margin account, right?
Yeah, yeah, yeah. When you're
Oh,
selling naked puts on margin, like just like what Randy's doing, that
yeah.
you're selling on a stock and the stock can go down. Well, it's the same as covered call, except when you leverage more than the cash, like how I would sell 10 Roku puts
Mhm.
and I only have $40,000 in my account, but
Right.
I sell 10 Roku puts for $2 a piece, and I only have $40,000 in my account. So if it drops, I am rolling them. You understand what I'm saying? Like that is my ultimate plan right there, is to roll them. If it drops, I will not take assignment. So if it drops today, I'm rolling today. I'm not gonna let the night comes, because if they assign me that night, I'm gonna get margin call the next day.
Right. So
Yeah,
rolling, by rolling, you mean again, what, you sell it and buy back again, right?
Yes, yeah. You buy back and then you sell.
Right, buy back and then sell. Right.
Yes, I'm not gonna keep those that night because you can get margin call if they assign
Right,
me.
right. But what if, when you're buying it back, it's you're paying higher price than you pay you know what I mean? You're paying a higher price than what your premium you had.
So I think so this will explain it a lot better, right? This is the way I look at it when I say rolling. So if it drops on me and I need to
Yeah.
roll it, you are waiting a longer time. So let's say you sold it for $1, right?
Right.
And it drops on you. Now it values $2, right? So you're gonna lose $100.
Right.
But it expires tomorrow, right?
Right.
Next week's contract is gonna value $3. So you understand
Uh,
what I'm saying now? So
yeah.
you are losing time, but you're still getting the same money. Or next week's contract could value $3.50. You understand what I'm saying? Because of IV and whatever. So it could even value $3.50. So now you're getting paid an extra $50 for another week.
Right. I think Randy explained it to us, but I have to keep on,
Yeah, yeah,
there's so much going on, you forget.
yeah. So it's more of time. You have to wait to get out of the trade, but you're not physically losing because you just roll into another week and
Okay.
you just keep rolling it as Randy says. So when I go over there and I start selling puts,
Yes.
I'm going to be selling 10 puts on Roku. That's 130,000, and I only got a 40,000 account. So I'm going to roll it. The second it comes down there, I'm going to roll it that day. If you know what I mean, because I don't want to take assignment of it overnight.
Gotcha.
see, see where I'm different with that is I usually have only max one or two puts at a time because I want to diversify it so I don't get uh, caught by. So if one of them goes bad, I don't got 10 going bad. Um, so I'm just curious why you don't try to diversify those out a little bit and maybe get 3 or 4 positions going at a time instead of 10 on one position.
Yeah. I'm looking at, as I said, I haven't started yet, but I'm looking at like what my position sizes are gonna be based on what I see because I only want to use 60 to 70% of my margin, so I'm gonna have to figure out what sizes I need right there to do it.
Yeah. Okay. Cool.
You say you only use 50% of your margin at any time, right?
Um, roughly, I I've had it up to 70 or 80%, but I like to keep it around 50 because when things go bad, like when the pandemic hit, yeah, if you're up at 70 or 80%, you start getting margin called, and so I had to start selling stuff pretty quick or buying it back pretty quick to get that back in line. I mean, you do that just for the black swan events, and here lately we've had a couple this year.
Oh, one more question. With IB, um, do they blackball you for getting margin called, or once you sell your stuff off, they don't care?
Nope, they actually won't do a margin call. They'll just send you a nasty email and saying, do something or we'll have to take steps. And the first time it happened, uh, I got over the Fed limits. And all they did, they went in and they sold about 20 shares of Visa. It brought me back in compliance.
Okay.
So, yeah, they know it happens because people that are using internet broker, they're people who are wanting to push the limits. They're wanting to make every dollar work for them, so they run it right up to the limits.
So like with where we're at right now, with all this stuff going on, what's your thought? With like how Texas and Florida is going, 'cause that is what's holding my money back. These last 2 weeks is I've been holding back from taking stock.
That's why I don't watch the news. I, I go by the mathematics. So if I'm looking at 68%, I let the stock market as a whole fill in those numbers because that 68% takes into account all the news in the world. It's not perfect, but 68%, I look at it this way. Casinos were built on a 1% advantage. They're taking a 51%, but they do, hundreds of millions of trades. At 68%, we got a huge advantage. So I'm doing as many trades as I can, and I diversify it over as many stocks as my portfolio will hold. And over the long run, I'll win 68% of the time. I'll lose 32% of the time, but I consider that a cost of business, and it's working out really well. I slowed down when the pandemic hit hard and just kind of balled up and took cover, but as soon as it started coming back, I started trading again. When I was doing that, I'm selling puts. When the pandemic hit, the stocks fell so fast, I got signed Apple and Visa. That's the only two I got assigned. I wrote them down and then I wrote them right back up.
See, that's what I like to hear, these things, what can go wrong, how you all deal with it. That's more important than, making the money. What if this happens? How do you deal with this, and how do you deal with that's
Yeah.
what the real thing is, important thing.
You just don't panic. You don't over leverage yourself so that you can always have an exit. As long as you know that you can exit and wait, then the stress is off.
Right.
So that's why I keep a 50% margin, because I know that if World War III starts, we get hit by a bomb in New York City, I'm going to shut it all down and wait and see how it shakes out. So I've got the margin available, or my cash available, just to buy everything back and go silent. That's the worst case.
Right.
Now, people who are leveraged to the hilt, at 99%, and it starts dropping like that, they're worried. Their stomachs are coming up.
I know. Yeah.
I think I'm at. Let me see where I'm at. I'm at. What am I? I'm at 61%,
That's
and
pretty reasonable.
yeah, and that's with me being down on a stock. That's with me being down on a stock. So I have a lot of cushion on mine. Like I would like to put on another trade, but as I said, I have to watch the news. I don't know. I can't run from it. Uh, one while we're on this topic, so could you go over how you dealt with your Facebook position?
Yeah, I just took a loss on it. I,
You say
yeah, I think I sold the put for about $3 and it ran up to $10. So I took a $700 loss. and just didn't deal with it.
So you didn't try to roll it to 1 week or 2 weeks from now?
No. And the reason I didn't is I wanted to use that money in Tesla,
Okay.
and I knew that I'd be making money in Tesla, and I didn't know what I'd be doing with Facebook. And so it was just easier for me to do that. Like I see, I consider those a cost of doing business. So, and I actually do have one that I was trying to double down on it, so I did buy another Facebook put or sell another Facebook put that day, and I sold it way down, and that one is making me a little money back on it. But the major one I just kind of ignored and wrote it off.
Okay.
Makes sense.
Now my Amazon put that went south that same, I think it was that same day, when the market had that big drop, I did roll that down. I had to, and it took me three rows to get even. Let me see if I still got it up here. Let me see.
You said 3 rolls to get even, so you roll it, what, 3 weeks away, or?
No, that was over a couple of days.
Oh, okay.
So yeah, let me share this screen. I'll show you what I did with it. So I sold the first. You see now my little Excel here.
Mm-hmm.
Okay, so I sold the first put at $20.95, and I had to buy it back at $59.58. I sold the next one at $63.25. I bought that back at $47.70. I sold the next one at $26.35. So I had to get down to $327 to get even. So I'm down $327. But I got one on right. I got two on right now that bring me back above even. So that's 3 cycles to wipe out that major loss we had that day. And this all took about a week and a half. But that's how you do it.
Oh, that's what I need to learn, because it would, the way you did it, buying it back for so much more is making me nervous, because that's how it's done. So I have to learn all that, not to be nervous about it. Just because you know the system, I don't. So
Well, don't forget that Amazon is, I don't even know where it is now. It's a huge stock. Let's see, it's
At 2,900.
yeah, it's 2,900. I can't even get to it. Let me see. It's at 2,800 right now, but that was a black swan day, and so don't let those numbers scare you, because my account moves $5,000 to $7,000 almost every day.
wow.
And that's why sometimes, I push you guys a little bit, but don't let me push you to something you're not comfortable with, because
Yeah,
'cause-
looking
'cause-
at
'cause-
you, the way you do it, it makes it sound so easy. But in real life, if I can control my emotions, then it's easy. But I quickly panic, so because I don't know what to do at that time. See, you know what you're doing, I don't.
yeah, like I said,
So I need to, huh?
9 months ago or 10, 12 months ago, I was working with T and AT&T and
Yes.
Verizon, the same stocks I'm recommending to you guys. I didn't jump here overnight. I've only been trading Tesla and Amazon for about a month.
Oh, okay. But I really appreciate that you are, sharing all that, because that's the real McCoy, as they say, this is where the truth lies, that, what really is happening behind the scenes. People just tell you all the good stuff,
Yeah.
and they don't tell you what you are telling us. So
Yeah.
that's so awesome, so
Yeah.
awesome. Really appreciate it.
You know, I treat this like the small business that I've always wanted. You know, I have no employees. I make all the decisions, whether whether it goes up or down. It's all me. And
Right.
and I spent the time to study this and learn it, and I really like it. And I'm just trying to share it out there with everyone else who wants to learn it.
Oh yes. But it's been over 1 hour that we have taken your time. I need to go for my walk.
Okay.
But yeah, I've really enjoyed it. And Theta Trader, you've been awesome, because I've learned so much from you. You shared, what you do, and Randy, of course. I mean, goes without saying. So I'm looking forward to future meetings, so people can, I can learn from you all. So
Don't
thank you so much.
don't forget
Thank you so much, Randy.
don't forget to
And
go over to don't forget to go over to the Theta Trader and subscribe over there, and
I am.
and follow his
For sure,
trades.
and I'll be asking him a lot of questions. So because he has quite a bit of a lot of knowledge. I don't. Being a woman, I'm just getting into it, so it's weird strange as it is being a woman, because I think differently. We women think differently, so I'll be asking questions.
Okay.
So I really appreciate that. So thank you, Randy, and thank you, Theta Trader, for being there. And Thumper as well, quiet as you are. He's always quiet and lurking. He's lurking all the time. Okay. Well, thank you guys, and I'll see you in the Discord. And next meeting is Saturday morning. Randy, are you still doing it for the beginner?
Yeah, we can do at least one more on Saturday. I'm not sure I'm going to keep doing the Saturday ones. But,
Okay. No problem.
Yeah, because unless we start getting more people, because we really haven't gotten more than about 3 or 4 people at one time. So.
Right. So yeah, it's okay if you don't want to do Saturday morning. Just let me know, so we won't do it. We
Okay.
just keep it Thursday evening if you want. That's all right.
Okay. Well, you have a good walk. We'll talk to you later.
Thank you. Bye.
Okay, guys. Anything else?
No, I'm good. Just waiting for once I get out of one of my positions, I'll probably thinking about making a move going over there.
Okay.
I just need to get. I think I need to get a paper account and play with it. In
Yeah.
the meantime.
Yeah. Internet Broker has a paper trading account, so.
So you have no concerns about interactive brokers changing like the maintenance requirements or lowering the amount of margin you get?
No, they just have to put that in there for legal reasons.
No, they still do 4 to 1. Yeah, some stock is gonna have different, and maybe they're better than what Weibo gives, because like Beyond Meat and Roku is 2 to 1, and that pisses me off. But maybe Interactive Brokers is different. I don't know. But
Well, there are some stocks that are considered riskier and they require
yeah,
higher maintenance.
yep. So you have to. That's one thing you have to look into there. But just because I do covered calls now, like all my stuff is on margin, which it doesn't cost that much because I only use $15,000 of their money at any given time. So I only pay $3 a day for that $15,000, and I'm only so for every week I just say $18 per week for my covered call that I sell, and that's it. Well, I got nothing else, Randy, and thanks for having me. I appreciate you answering my questions.
All right.
Thank you, Randy.
Yeah, I think Harrison just joined us. Harrison, you got any quick questions?
what's going on.
So we're just about to wrap up, Harrison. If you have
Okay, I just wanted to say hi. Nah,
okay,
just wanted to pop in and say hi.
okay, cool. Well, you were a hit on the last class we had. I mean, it's one of the most popular videos. The way we went through that, walking down a trade.
Yep. We went really in depth with it.
Yeah, I appreciate you doing that with us.
No, thank you for teaching. Come on.
All right. Well, I'm gonna go ahead and wrap it up then. We'll see you guys next week.
Yep.
Thank you.
Okay, bye.